Hello everybody. This is another update on the Gold Forecaster Index. We got another data point for the month of February and it's looking very good. So this is the new data point and we see that we have a breakout in the Gold Forecaster Index. This is a very positive breakout. You can see that we didn't have such a large increase since 2015. So this is really an indicator that it is going very well for the precious metals sector. And my other chart with the PPI also shows an increase here, going into positive territory in February. Now, why is this? Let's go to the gold chart first. So since 2015, we saw that the gold price is making higher lows and going into resistance of 1350. And the low is going higher and higher, and we probably will hit another higher low here, and then at the end of the year we should go above 1350 and go to the 1400 level. Now let's see why we go into the positive territory here. Let's look at the leading indicators. We see that we are still going in a downtrend leading with the leading index here. So I think that growth will be anemic. It will be going down. Um, let's see here. This is the 10-year yield minus consumer price index. The blue line is coming down here. You can see that here. The blue line is coming down, which means yields will be going down and the consumer price index goes up. So there's more inflation at lower yields, and that will be positive for gold. So the red chart will be going up. That's what I think. So let's monitor if this blue line can continue going down here. Um, Most of this move here comes from the 10-year yield. So if you compare the 10-year yield from February here, February this here, when you compare that with a year ago here in 2018, you see that the 10-year yield has been coming down, and that's mostly good for the gold price because lower yields mean people will go to gold. So that's where the move is coming from. Let's look at the producer price index. We can see that there is a small blip here upwards. So things are looking better now. We are not going into the negative. So I think that the CPI might stabilize at 2% here. So inflation will be stable. Capacity utilization is still very high, so this might stabilize upwards. So the consumer price index might stay at this level. We also have a new trade deficit number, which came out this week. And well, actually, the trade deficit shrunk in February, but it's just a little bit here. So check, we should monitor here if this trend will be going up the next month, but the overall trend is still down. But actually, I have to admit that yeah, Trump has been doing very well because the trade deficit is actually shrinking. Now, this is the only data point that is bad for gold. If this continues going down, it's good for gold, but it's now actually going up here, so the deficit is shrinking. So let's monitor that. As you know, the Fed is still decreasing its balance sheet here until September, and the money supply is therefore not going up as fast as it should be. But there will be an end to that in September, so that should be good for gold. And I will end this video by talking a bit about China. So China is actually buying gold, and we can see that in the latest premium numbers. You can see the silver premium, which is at not at an all-time high, but is at the upper end of this trend. So I think that silver might bottom out soon. That's for silver. And for gold, we have this data point, which is also in the upper range. Yeah, my data goes till 2012. So this is actually pretty positive for gold. You can see here the premium is 1.5% at a gold price of 1,300. And the last time that we saw this premium was at a gold price of 1,100. So actually this might be a new bottom here. Like here, this might be a new bottom and then going higher. Here we also had a small increase in premium at a lower gold price. And also here. So, so we are actually seeing a high premium at a higher gold price. So this is very bullish for the gold. Now let's look at more China data. This is the People's Bank of China. And when we go to money and banking statistics, we can find official reserve assets. Now for March, you can see, well, China has been accumulating gold. And you can see that here from the numbers here. 793, 794, it's actually going up 5,000, 6,000. Okay, so in March they also bought more gold. So this number is actually going up. So that's for China. And when we look at the SGE, Shanghai Gold Exchange data, we can see here the latest data from March. And then I also always go here looking at the current month. And the current month says that we have demand of 218,000 kilo, which is 200 tons. So that's above 50 tons per week, which is a very high number. So you can see here that the Chinese are really buying gold at this moment. So let's wait for the April numbers of SGE data and see where we go here. So that was the update. So if there is a time to buy gold, I think it's today. Okay, I'll see you in the next video.